Ladies and gentlemen, all eyes are on Apple reporting tomorrow after the market close. It's going to dictate the future on if we go up or down. We're going to share our game plan in Forex as well as our full stock analysis. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. We're going to be talking a little about Apple as well as a couple trades I did here today. You see, I can actually talk about trades I lost money on, and I actually had a down day today. I literally lost $350, and I couldn't be prouder of myself. And I'm going to talk a little about how I did that today, but I want to just go over some things with you here and show you why it's so important to have a losing day or, a limited losing day. How you lose is a very important thing in the market, and how you approach the market is very important. I got an email from a trader inside our room here today, and the trader was able to make, I'm not going to drop his name, the trader was able to make $12,000. And of course, I was extremely congratulating him and whatever. And this trader is like a perma bear. And this trader loves when the market pulls in, shorts every time, just takes names, attacks them short. Again, he posts in the room sometimes. I'm not here to spoil his name. And I basically stepped back and I asked him, and I said, "Okay, how you been doing?" He's like, "Well, April's been amazing. In the past 4 weeks, the trader made a little over 100 grand." And I was like, "Hey, congratulations, man. That's a solid P&L. That is totally awesome." He's like, "Yeah, but I'm down now only 95,000 for the year." And I was like, "Whoa, where the hell did that come from?" And that's where it raised something where I realized something about P&Ls. I think it's a very important thing to make money, and I think it's the easiest BS pitch tool ever in existence. It's the easiest BS pitch tool ever in existence. So, like, for example, when I was posting, my results through T3, and, it was multi-million dollar years. One year, I think the year I posted, I think was a little over $1 million. I realized something for a second. I took a step back and I said, you know what? I'm insinuating that following me could potentially make you a millionaire. And yes, there are actually people in this room. I know at least 7 of them, which is not a lot considering the hundreds of members we have, who weren't able to make 7 figures in the market and are today making 7 figures in the market, following us, sharing their ideas in the room, doing their own things, doing my ideas, doing both things, asking me for an idea, how I think about their names here and there, just utilizing the room to the best way they can. Anybody who tells you today was a great trading day doesn't know what they're talking about. You see, because what I have access to is I have access to the back end of many prop firms that these prop firms share with me because I like to help their traders. A lot of their traders listen into the Newsbeat show, and I simply look at a general consensus. You'll always have a day where somebody does good. You'll always have a month where somebody was hitting really well for the month, and that's great, and I'm very happy for that. But you have to be able to take things in a particular context. You have to take things in a particular context. You have to look at certain market conditions and simply say to yourself, it's not a good trading day. We had geopolitical news. Prime Minister Netanyahu came out today and shared with the world of why the Iranian deal, or whatever, the JPCOA, whatever the acronym is for that deal, why it was invalid and why it should be nullified. That is why the market fell today. So if you were looking, for example, at the triple Qs, and you saw the Qs on the 5-minute here today dropping like this, just zoom in so you could see some nice easy candlesticks. We were on top of this information pretty early. Now, so the market was falling, and it created, one could say in hindsight, a great short opportunity, and a lot of people did catch that move short. But not all trading days are created equal. The insinuation that somebody just comes in every single day, and just consistently makes thousands and thousands of dollars is a lie. It is a complete and utter lie. I think I was the closest person who has ever remotely have come close to that. Those were the records I posted with T3, where I had like 11 down days, and I think the worst one was like $5,000, and I had like 50 up days, which were between $10,000 and $100,000. And that was based on just some phenomenal news flow that came in. But I'm just warning you, the fact that you can insinuate a P&L as a pitch is not effective in the long run. It gets people's eyes sparked up. Because I know what happens. I know what happens. And why is this important? I'm telling you why it's important. There was a video that's very popular on the internet outside this firm. And it's a dude who, I'm not going to drop his name, but you probably know who he is. And he basically says, see how I turned 25,000 into $198,000, or is it 178,000? One of those numbers. And he's like, see how I did it. And it's great because people are sitting there with 25 grand saying, wow, if I could muster up 25 grand, wow, if I could even just turn 25 grand into 50 grand, wow, that would be incredible. Forget about making 198 grand. But I know that trader. And I know the prop firm that trader trades at. And the owners of the prop firm let me see and try to help their traders, and I see what happens. What happens is these traders, they go on stretches, and what they do is, I actually run into his videos on FinViz. When you go to finviz.com, very great website, and I'm sitting there, and I'm like, dude, why weren't you posting your January numbers and your February numbers? But he had an amazing March. Do you know that dude is actually down for the year? Yeah, he has one of the most amazing pitches out there. So I thought I would just come up, and I was doing my research on FinViz today, and it came up, and I had a chance to talk to the guy who owns the prop firm in which he trades at. And I'm asking the guy at the prop firm, I'm like, what the hell is this? And the guy at the prop firm's like, look, I don't care. That's his account. He could do whatever he wants. He could pitch it how he wants. It's none of my business. And I was like, okay. But I thought it's important to share with you some of these things. With that being said, I want to show you how I lost money today and why I agree with it. So we're going to start off with Apple, which I'm going to talk more about reporting. I actually shorted Apple today. Here's Apple opening on the day. It shoots up here, rips through the pivot, rips through a myriad of moving averages, including the 200s. And right around here at the top of this candle, I go ahead and I buy some Apple puts. Very light because Apple puts are very expensive because they're reporting tomorrow. And what happened here was Apple pushed up higher, and I went ahead and I nailed in a 19-cent loss. I lost $95 on this trade. I took 5 contracts. It was a low conviction trade, and I lost. However, here's the first 5 minutes of Apple, and you saw Apple shot up strong. Now, did I have an edge? Why the hell were you shorting Apple? That's the real question. That's the real question. Why was I shorting Apple? That is the question you should. Did I have an edge? Did I have an edge in shorting that Apple? It's not about the $95 I lost. And your answer is yes. It might be hard to read here, but I'll go ahead and read it for you. Apple's price target, you can see it's in the pre-market at 748, posted here. Apple price target lowered to 157 from 168 at Barclays. Very famous analyst Mark Moskowitz, known all across Wall Street, basically saying that He has concerns of a weaker iPhone franchise, which again, if you want to go back to what we were talking about with Apple, we sort of agreed when we came out and we did this Newsbeat show about Apple. I'm going to get all into Apple numbers. I'm going to get into their guidance. I'm going to get into everything. Let me just finish up on the trades I lost on. So, yes. Now, here's a question. Well, yeah, all right, you had a downgrade. Apple shot up. What was the market doing when you shorted Apple, Mark? Well, here are the triple Qs in the morning going through day lows on that first 5 minute bar. See that? Flushed 40 cents off the high. While I was shorting this at the top here. That is an acceptable loss. I am so proud of that loss. Because, why am I proud of that loss? Why is it good to highlight this loss? It's because I had everything going with me. The market was with me. Apple, not too bullish looking on the daily chart. You're underneath. You can make a very bearish argument for this chart. You're underneath all these moving averages here. You're in the bottom end of a range. I get it. You had the downgrade, the market moving with me because I was buying Apple puts and the market was going through lows. I had every single thing going with me. So what happened? My guess is institutional buyers were either covering some Apple shorts before tomorrow or buying Apple before tomorrow. Whether you cover a short or you buy long, it really produces the same effect. I mean, you're buying shares for whatever reason, for whatever your prior position was. And that sort of institutional buying probably clipped me out of Apple today. On this trade, I will lose on this trade 100,000 times. Now, what wasn't big this year? Well, not a lot of big breaking M&A type chatter names. We had a few. We caught a few. But we're going to get a lot more. And this is generally what happens throughout the midst of an earnings season. You know, we already had Google report, we had Amazon report, we had Netflix report, we had all these reports, and I'm going to show you how I played earnings tonight. And so this was one trade I lost on. Another trade was AGN, in which I bought 2 option contracts and lost like $240 or $250. Basically, AGN had good news, according, it gapped up. At least it was being interpreted bullishly early on. Flush, sold off from 166 to 159 to 158. I wasn't buying here, but right around here I bought, right around there. And it pulled down a little lower, and I ended up losing some money. So I ended up losing $350 today. On ideas like this, that is completely acceptable. Not only that, for better or for worse, I will always make it easy to follow me. Whether I have a good day or whether I have a bad day, one thing you will always get is that 70% win rate with me or better. My win rate's over 80 this year. Now, why is a win rate possible? Why is a win rate positive? Because it produces better psychological fortitude when you're doing these things. So those are 2 trades I lost on today. Proud of the way I traded. Didn't revenge trade. Didn't open up a bunch of huge positions to make up for a big loss. That's the scary thing about a market like this. That is the scary thing that you do in a market like this. So with that being said, let's go over Apple. So Apple, we talked about this several Newsbeat shows ago. You had downgrades. Here's the bottom line. Nobody knows if Apple's going to gap up or gap down on earnings. It depends. Wall Street can interpret things in very funny ways. And why I say that is because, for example, if you remember Facebook gapping up on earnings, everybody was negative on Facebook, negative on Facebook. Oh my God, he's going to court. And I was able to accurately call a call spread here, in which a lot of you guys made a lot of money on. So I made thousands and thousands of dollars on this. But, again, I'll be the first to admit my win rate on pre-earnings, like being part of a name before earnings, is not over 70%. It's probably in the high 50s, low 60s on average. So that's just me being honest about my hit rate on some of these. However, Facebook was nice. So with Apple, they're reporting tomorrow after the close. How am I going to play it? All right. I am probably going to do something cute. I'm going to do something cute on Apple. I'm probably going to end up doing a put spread. And what I'm probably going to also do is I'm going to buy some out of the money calls and out of the money puts. It's going to be weird. So let me explain why of what I'm doing here in Apple for earnings tomorrow. Again, as we are predicting this bearishly, obviously the majority of Wall Street disagree with me, unlike in Facebook where the majority of Wall Street did agree with me. A lot of the institutional guys disagreed with me, but on Facebook, the analysts were actually agreeing with me. On Apple, I'm actually disagreeing this time with the majority of analysts. And just looking at Apple here, yes, it's poised to a small positive thing after where Apple has come from. You know, with all these names hitting all-time highs, like Amazon hitting all-time highs recently, and things like that, and Microsoft hitting all-time highs recently. It's very important to note that Apple, um, if something really positive comes out, could beat. Now, in terms of beating on earnings per share, there's a 125% chance that they're going to beat on earnings per share. Don't be delusional. Don't think that the Wall Street expects them to report, just for random example, $2 and they're going to report $1.99 or less. There's a 0% chance of that happening. That doesn't mean Apple's going to gap up because they're going to beat on earnings. What's going to move Apple is their guidance. That is what's going to move Apple. That is going to be the most important thing for Apple. So here's the messed up part. If the Apple guidance is really bad, I could see Apple breaking 157.51 and going down to the 150 level. In fact, that would be very bad. I have a feeling there's too much negative sentiment around these iPhone numbers, and I almost have a feeling as if Apple is prepping for it and is going to try to portray a picture that's not so bad. Now, this is very commonly done by a lot of analyst firms, or a lot of big multi-billion dollar companies rather. So for example, Facebook, they knew that they were in hot water. Facebook knew that they were in deep you know what. They were up to their knees in it. So what did Facebook do? Oh yeah, by the way, we're authorizing a $9 billion buyback program because we feel our shares are so cheap. And they always do that to make a statement. And you know what it does? It covers weakness. It covers weakness. Because now the company is now putting their money where their mouth is and saying, well, we disagree with you that our shares should be trading down here. I'll come to you and say, prove it. And they'll come and say, okay, we're buying $9 billion worth of stock. Oh, okay, you're right. At least you're putting your money where your mouth is. I would not be surprised. Now, you heard it here first. I'm calling it. I would not be surprised that Apple's going to try to pad their earnings with a potential, um, with a potential buyback. I think they would have to be insane not to come out and say they're buying back shares. Another thing to keep an eye on in Apple, the repatriation of dollars. Are they going to move all their money from overseas or Ireland where they're, where they're dumping international assets in? Are they going to move it to the United States? The answer is yes. Now, the question is that really bullish for the company? I'm going to say no. Why? Well, it's good for America. But what's good for America doesn't necessitate of what's good for Apple. The truth is, what's good for Apple is getting what would be called slave labor here in the United States by shipping off to these. Did you see some of these YouTube videos about some of these companies that develop Apple, particular Apple products like their chips or their cameras? These people are like they're working like 20 hours a day. They're literally sleeping in beds that are on site in these disgusting, moldy sewage type rooms. I kid you not. It's all over YouTube and they show videos of it. You wonder why the suicide rate is so high over there. You have people killing themselves in these Apple factories. It is the most disgusting type thing ever, but that's actually what's good for Apple. Now, I'm not insinuating that working conditions are desolate like that in Ireland, where they're parking a lot of their money, but that's what's actually best for Apple. Hiring Americans to do that job is not good for Apple, it's good for Americans. Now, the genius part about this tax plan is it sort of meets them halfway. It says, okay, well, look, you're going to bring back your money. You're going to have to pay taxes on that. We're going to give you a big break on those taxes, and the taxes you're paying here from now on are going to be much less than they were before. So it makes a lot more sense. I think the repatriation is going to be slightly negative to neutral overall. That's what I think. I think Apple's going to do a buyback because they're not stupid. You have all this cash on hand. You're failing on iPhone sales. You're telling me that you don't want to buy back some shares? When I talk like that, you know what I want to really do on Apple? I want to buy out of the money calls, like way out of the money calls and way out of the money puts as lotto tickets. Because here's the bottom line. Apple has a really great chance. All right, yeah, all right. So our iPhones, they could spin the words however they want. Well, our guidance on the iPhone sales are bad for this year, but it's going to pick up by this much by next fiscal year, and so on and so on. And they could word it slickly. I mean, they have to convince Wall Street that they shouldn't sell off. The other part is they don't do this buyback program, which would be a mistake by Tim Cook. And it would actually, I wouldn't put him on my top 5 worst management list, but because I think Tim Cook is a great manager, but I would consider it one of the biggest blunders of earnings season this year for Apple to not announce a buyback program. So those are going to be key things to look at on Apple. Make sure that they're reauthorizing a buyback program. Facebook was very intelligent. Facebook was very intelligent when they did the buyback because they knew there was so much garbage going around in the media, so much garbage swirling around the company. You know, I saw the first Facebook commercial. Did any of you guys actually see it? Facebook is going to be doing more to ensure that you get what you signed up on Facebook for. Like something like that, like the ability to talk with friends and not be worried about this. And they literally started running this like ad campaign to make them not look like a bunch of scumbags. If they're investing billions of dollars on prime time NBA time commercials, hint, that's where I saw the commercial. If they're stupid enough to run a marketing campaign to make people not think negatively about Facebook, then they're smart enough to do a buyback or authorize a buyback program or add more dollars to reauthorize more dollars in their buyback program. And I am saying right now, Facebook was very intelligent by doing that. And with all the garbage circulating these Apple batteries, this company would have to be insane not to take a page out of Facebook's book, pun intended. So look for a buyback authorization. Look for rosy words by Tim Cook saying, oh, yeah, these batteries are not a problem. The slumping iPhone sales are not a problem. And I half agree with him. Just remember how stupid I said Apple was for how quickly they released the Apple iPhone X. How stupid they are. How many people here actually own the iPhone X? How many people have the 8 or 7 or whatever number was before that? How many people have an X and how many people don't? But the problem is, as years go on, you're going to eventually own an X or something newer. So yes, I get it. Nobody is throwing away their Apple iPhones. I get it. So what? Maybe do I do a put spread? I'm starting to think the smartest thing is like, let's say, for example, I'll give you a perfect example. Let's say Apple closes here at 165 tomorrow before earnings, right? I'm thinking like calls and puts like $10 apart. Like, so for example, if Apple closes at 165 tomorrow, like it's 345 and Apple's at 165. I'm thinking like maybe we buy the 175 calls and maybe we buy the 155 puts. Give Apple a chance to completely drop the ball, look like total idiots, or have respect for Apple that they're going to do everything humanly possible to maintain that image, do a huge buyback program, have Tim Cook come out with a speech. Then I guarantee you there's 10 people around him writing the speech for him tomorrow on how to do this earnings report, and have something really rosy to say. That's how I think I approach Apple tomorrow. The company does have real problems. It is going to hurt their guidance. No BS they say on the conference call tomorrow is going to make me think otherwise. The question is, how are they going to spin that information? And are they going to um, authorize a buyback? Those are the questions. Those are my thoughts. Okay, with that being said, let's get into our game plan in Forex. Game plan, very simple. HTBX. Name that exploded today. And I'm just looking for a follow through from 265 on a very big gap, a very big pop up here today. Very simple, very stupid. FDC, a name we called bullishly today in chat. And you could just see right here on FDC, beautiful pop up here today. And look for a breakout tomorrow through 1823. Algo Buster reversal level would be 1779. That's where the algorithms will be buying a lot of shares. And that's what I'd be looking for in FDC tomorrow. Bullishness over there. Of course, next I'm going to share with you my live Forex trades again. No fills from the other night. So what I do is every time these orders don't get filled, I cancel them and I re-enter them. I have 5 buys and a sell here today. Here's my size in US standard lots. Here's the symbols I'm trading. Here's the price that I'm bidding, or in this case offering at. Here's my stop loss if I'm wrong. There's my take profit if I'm right. Tremendous, tremendous, tremendous week ahead. We have so many great things on the radar coming up with this, all these earnings. And I just want to share with you real quick what I did on earnings. So you have Seagate reporting tomorrow morning. Again, you would have to be either part of the Twitter service or my room if you wanted to receive this one idea. But pretty much STX is reporting tomorrow. And what I did was I took a strangle in WDC, which basically means I bought calls and I bought puts. And basically, if STX gaps up huge or gaps down huge, I'm hoping WDC would gap in a similar direction as well. It was, I believe, personally underpriced, and that was how I played earnings, by playing a comp to earnings. WDC already reported last week, as you know. And with WDC so beaten up and STX reporting here, I think there's a good chance you could get a very big move or a very big down move in WDC. Hence, I took a strangle and I played both sides of the table. I'm guessing it's going to be an easy victory for us tomorrow after STX reports. And with that being said, ladies and gentlemen, we're going to go into our full stock analysis. That's your stocks, my levels and thoughts, and I break them down for you in real time. That is available for Newsbeat Live members only. We are the fastest growing trading room in America. Happy trading, make money. We'll see you guys next time on the Newsbeat Live trading broadcast. Have a wonderful evening.